Watch what you say. Everything here is going on my YouTube channel, so I appreciate you guys stopping by. Yes, finally. Okay, it's working. It's working. How y'all been? Hope you had of stock market currently. Kind of what would be entering a period in the market where trade pattern where people don't really know, is the market going to go up, is the market going to go down. It's where we've been, right? This is something that we've been a very kind of stagnant, and now you've seen tech stocks and all the stocks and meme stocks that everybody likes to talk about here on this channel. We've seen a lot of those being hurt, but on the other hand, Dow Jones today's Monday, hit the highest peak it's ever hit in its entire life, right? In its entire history, right? You have other stocks, these quote unquote value stocks, cyclical stocks that are increasing a lot. H-bar, says Jeff Hunter. Hey, what's up, Tark the House? Nice to see you, my friend. I appreciate you stopping by. Always love to see your name here in the chat. You have these value or regular stocks that are quote unquote cyclical, and what cyclical means is that they perform well when the economy is doing well. You're seeing a rotation back into these stocks. So it's a very interesting dynamic that we've got going on, right? Because you have this balance and a fight, really, between people who want to be putting money into stocks, but they don't want to be putting it into tech stocks anymore. They want to be putting it into growth stocks. So, hi, Blue, thank you for the presents. Unichan666 says, hello, my friend. You do not get enough live streaming earlier today, says Tyler. No, I don't. I have to stream every day, Tyler. Monday through Thursday, between 9 to 11. I'm usually on here for about an hour. So I gotta keep people updated. This is my schedule. So can you just say you're gorgeous? Puminator, thank you. I appreciate you. Much love to you. No tech and EV is the future. We aren't selling Adam T 2021. So let's talk about that, Adam T, because I want to wait for a few more people to stop by before I give my full thesis of what we're going to be seeing over the future. But it's interesting. It's so interesting because if you look at Hi Blue, thank you so much for the presents. Oh my gosh, I appreciate you, my friend. It's so interesting what's been happening to something like Tesla. Right? Tesla, as recently as a month ago, was 800 some bucks. Now, today, it's 550. This thing's on fire, so, and honestly, I think I'm looking to enter into Tesla soon. Lit, L-I-T, says Skankbait. Nice name, by the way. That's funny. Don't know much about the stock L-I-T. I will look it up. But it's with something like these electric vehicle stocks have been massively selling off. And here's the reason why. HCMC finally announced they have a Twitter account. Insider trader Phillips66 going to 160. Huh, that's interesting. So before we get to that, I want to finish my thought about tech stocks. These EV stocks have been massively selling off. And there's a thing in the market that you guys have to understand, is that there's a term called price to perfection. Okay, and what price to perfection means is that essentially, because even though people know electric vehicles are the future, in California, they're banning sales of new new internal combustion vehicles by 2035. In Europe, it's by 2030 in a lot of countries, right? EVs are going to be the only thing around 20 years from now. But we're not there yet, right? We still live in 2021. We don't live in 2035. Living in 2035, please give us the stock updates. Hi Andy, says Party Mama. Dennis responding, says Andy. Hello, Dennis. Dennis, I always love seeing your name here, my friend. I finally looked up SOS stock for you, but then you weren't here in the last couple times. Tark the House says, you made a good call on CCIV. I want to finish and tech stocks selling off. I think it's because we have been for so long priced to perfection. And essentially that means that anything short of saying that they had a 1 billion increase percentage in sales means that people are going to sell it off because there's no room potential to grow. If you're already trading at 800 times earnings, which Tesla is, then, how much more can you really say, well, I'm banking on the future earnings to catch up. You literally have to have the perfect scenario. Dan Rizek says, answer your question. I'll look into this chat in just a second. I have the chat pulled up here on my screen, but I want to finish my thought because there's a lot of comments and it gets distracting, right? So that's what we're seeing right now. But I do think we're going to see, I think there's going to be more pain. So now we've got 50 people here. I think this, I might as well go ahead and say it. I think we're going to see more pain in tech in the near term. Honestly, I think the rotation that we're seeing into value stocks, into these cyclical stocks, will continue until the end of May. I think once we hit the end of May and we are entering almost full vaccination or majority vaccination territory and the economy is opening up again in the country, then we're going to see rotation back into tech stocks. And here's my thesis behind that. Because currently right now, right, it's interesting. As the economy does better, people think that these growth stocks are going to do worse. Kind of silly, right? But it's not actually that they're thinking they're going to do worse in this new economy. They're just rotating out and not putting their new money into these stocks. It's a supply and demand problem. And that's something hard to get past in your brain, is that the valuation of stocks, it's not necessarily correlative to the success of the business, to how good a business does. This is why meme stocks exist, right? GameStop today went back up to $200. Why? Because Diamond Hands are coming to rescue me. I have 2 shares at 380. They're coming to rescue me over here. So the valuation of companies doesn't always have to be exactly tied to the strength of a future company. So because the market is backwards, once the economy is kind of like, quote unquote, all the way open again, I think people are going to be like, oh, now we've priced in all the gains from these value stocks. It's going to be time to rotate back into tech stocks, because that's what we've been seeing. Nice haircut, says Des Pro. I appreciate you. I think that's what we're going to see. And so I highly anticipate over the next month, 2 months or so, we're going to see continued growth in these valuation stocks, in these value stocks. I think tech is going to bottom out within the next couple of weeks, but then trade sideways and then go a lot higher after the economy fully reopens, because then people are like, oh, I want to go back into growth stocks again. This is just how things cycle out. Okay, I have to go back. I want to talk about Live5X Live says HCMC announced they finally have a Twitter account. Look, I'm glad people aren't talking about HCMC as much anymore, but that thing has crashed. And this is a lesson. This was one of the big penny stocks that everyone was talking to me about 3 weeks ago. But this thing has massively crashed, continuing to massively crash. And this is a great lesson on what I term the danger of momentum investing and meme investing, is that if you are not first of the party, you're going to be last in line in terms of losing all of your money. And that's what we're seeing with HCMC. And they raised a bunch of money because their stock went up. So it looks like they're trying to legitimize themselves. That's interesting. Insider trading on Phillips 66, gas spikes on the way. I do believe gas is going to continue to go up. I was kind of bearish on gas in terms of, I thought gas would peak like at $60 a barrel, and it's like hitting 70. I think it's going to go way higher. And this is because Saudi Arabia and all of OPEC declined to reduce their production cuts, and so that they're actually going to continue new production. My music has stopped playing. Come on, play this for me, please. And also we've been seeing a lot of turmoil in the Middle East in terms of when it comes to oil. We've also had Texas for a long time. All of their refineries were shut down, and that supply chain takes a while to build up again. So I think we're going to see oil high, and oil being higher is going to cause inflation fears to be higher. And if inflation fears are going to be higher, then bond yields are going to rise. And if bond yields are going to rise, then tech stocks are going to fall. There's a lot of knock-on effects that all these people are pricing in, and it's why the stock market, in my opinion, is a lot of BS a lot of the time. But you have to understand that just because something is stupid or doesn't make a lot of sense or kind of asinine doesn't mean that it's not going to make a lot of money, right? Did I look into OZSC, says Does Pro? I did not. GameStop baby hit 195, says Mountain Man. Absolutely did. Is it a good time to buy NIO, or do you think we'll drop some more? Dan Near65. That was your question. I think we will see continuations of drops. As I think the I don't think so the reason why. Okay, so let's talk about Salt and Pepper 159 says Mark Cuban will take Dogecoin to Mavericks games. I do want to talk about that, but let's talk about the reason why. Okay, so the major reason why tech stocks are selling off is not just because of the cyclical rotation into value stocks, but also because of the 10-year Treasury yield rising. Why is this? Why does the 10-year Treasury yield mean anything for stocks? What the 10-year Treasury is a government-issued bond, right? And a bond just says, it's essentially an IOU. You give them some money, and they say, I owe you your money back plus interest, right? And that's what it is. So for 10 years, that means you have a guaranteed interest payment on your money that you give to the government for 10 years. That's what that is, okay? So while you have low bond yield, that means you're getting a very low interest payment back for loaning your money essentially to the government, okay? So when you have that low interest payment that you're getting back, that means that the thing about the 10-year Treasury and Treasury bonds in general, Larambi said, hey, you got a haircut? Absolutely. I said I would be getting one. My hair was getting so long, I was growing a mullet in the back. When you have the 10-year Treasury yields really low, these are called the safe or risk-free funds, right? So if you wanted zero risk in your investment, you would invest in Treasury bonds because essentially the only risk of you not getting paid on your Treasury bonds is if the United States federal government collapses. And if the United States federal government collapses, did I keep the wallet? No, Watley meant to. It's all gone. The only risk you have is that the United States federal government collapses. And if the government collapses, we have a lot bigger problems than your stock market, okay? We much bigger problems. So it's essentially a risk-free investment. And when it's really low, that means that your ability to make money into the future risk-free is really, really low. So there's a principle in investing. There's a principle in investing called discounted cash flows. Now, we're getting intense, y'all. This is some knowledge, so write this down. Discounted cash flows, DCF. And this is how I look at valuing real estate, for example. And the principle of discounted cash flows means that $1 today is worth more than $1 tomorrow or $1 a year from now, okay? And why is that? Because if I have $1 today, that means I can invest it, and over the course of a year, I can expect that dollar to earn me some amount of interest, right? I can expect that dollar to make me more money over the course of the year than if you gave me $1 1 year from now, because I won't have time to invest that into a business or into real estate, into stocks, or anything else. So the reason why tech stocks are selling off is because the Treasury yield on the 10-year bond has gone up. It went up from like 0.5 percentage point to 1.5 percentage points, right? So, and what does that mean? That means that the discount of your future earnings, discounted cash flows, has to go down, right? Your future money is not worth as much as it would be worth today because you have a bigger trade-off in risk-free funds. When your risk-free funds are essentially at 0% interest, whether or not you earn $1 today or earn $1 tomorrow doesn't matter because your risk-free rate is almost at 0, right? But when you add 1 or 2, 3 percentage points, then all of a sudden that dollar a year from now is only worth 97 cents. Okay, I called it. Wildly Matthew says you should have kept the mullet. Called the style portfolio in the front, liabilities in the back. Yeah, I got rid of my liabilities, baby. So that's why these tech stocks are collapsing, right? If you look at the Nasdaq, it's down 10%. Nasdaq is very heavily in tech, right? It's because if the 10-year Treasury yield is now at 1.5%, let's say it went up 1 percentage point. Now all of a sudden you have that compounding every single year. So $1 1 year from now is only worth 98.5 cents. And that same dollar 2 years from now is only worth 97 cents. And that same dollar 3 years from now is only worth